I want to go to a chart which gives us the history, which you studied so well and you talk about, which is trade-weighted United Kingdom. This has come up twice today in conversation, and we are on the edge of John Major. I mean, there's just no, this is the path of Brexit. Breaking down below here would be a big deal. Pippa, back to 1992. Is this the United Kingdom of 1992?
I don't think it is. It's not in the same scale, but the key thing is to remember, many of the investors are saying, I may not like the uncertainty of Brexit, but it's still not very easy to make money on the continent. So it's not either or. They're not choosing Britain or the continent. So the FX market's reaction aren't necessarily commensurate with where investors are going. Foreign direct investment in the UK is still rising.
Right. I know you've got a bias to Zurich, Shahab, as well, but the idea here of linking market activity with what people do with money is a key determinant, isn't it?
That's right. I think the reality, though, is that the currency is trying to look ahead and price in a risk premium for what the UK could look like in 2 to 3 years if we end up, for example, with a no-deal Brexit. And I think at that point, questions will be asked about how much investment the UK will be seeing, and the pound is trying to price in some probability, it has to, that outcome may arise eventually.
But the huge irony is, the weaker sterling goes, the more competitive the United Kingdom is.
Well, let's drag in Francine here. Francine?
Yeah. Pippa, the concern is that actually manufacturing makes only a small part of the UK economy, so it's more competitive, but actually the economy is so reliant on financial services. If there's a crashing out or if there's, a disorderly Brexit, what does that mean for this very important industry for the UK? It's not in one of their priorities.
I understand. So, these are my personal views, but money is a lot like water, and it will move to wherever it faces the least resistance. So unless the British intend to raise their taxes and regulatory red tape to be above the levels of the EU, then capital will continue to flow into the UK, more so still if sterling is weaker. So this idea that the city has to be smaller going forward if there's no deal after Brexit, to me, that doesn't add up.